All right, let's. It's basically time to do a trend review. So I'm just gonna go over what happened in the ES. You can see what happened here is um, you had this base of accumulation. First of all, as soon as it came to this level, demand came in, and that demand was it was early in the morning. So, but the price volume action was there. I don't like this because I can't really figure it out. It's just ones and zeros, meaning you can't figure out like is this real demand? Where's the volume? And that's because it's early in the morning. Can't figure it out. So after that, it tested on heavy volume, but still it's too early to tell. After that, supply did come in, but it didn't. All it did was spring. So this is like a spring or shakeout or whatever of the low. So whenever taking a signal into account, you need to consider levels, background, and context, and higher time frame, etc. So that has to be, if this supply came in at the top of a trend, like if this was going higher highs, higher highs, higher highs, higher highs, and then supply comes in, that's a different thing. That's some selling, or buy low, sell high supply. Just like buy low, here is demand, right? So, but when it's in a range, then the supply could be an attempted maneuver to shake you out, or shake out, or do stop runs, etc. So I saw this and I'm thinking, there's something not right, because it didn't have any follow through or break right through. In fact, what happened is more volume came in right afterwards. It's like, what's going on? It goes to support on, say, 11,000 contracts, and then from support, 19,000 contracts come up. It does a spring, 19,000 contracts come up. Does that make any sense? So it drives down 11,000, 19,000 reverse. Then it drives down again on 7,000, and 24,000 come back up. So obviously, there's something that doesn't make sense here at these lows. And what doesn't make sense is that the attempts to break are being bought. So this attempt to break is being bought. This attempt to break is being bought. And the supply is diminishing, going from 11,706 to only 2,000. If it's going from 11,706 to only 2,000, the supply is weakening. You have 4 data points here. Whereas these two from support are 19 and followed by 24,000. So what's going on is going support being bought. And then after that, this was like when it did the breakout right here. The breakout came on heavy volume, that 9,000 contracts, relatively speaking, bigger than 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, around 20 bricks. So something's up. And then that led to this. But it's not really a climax. It's all this up and down is getting you confused and getting the indicators confused. But what it is actually demand. It's a lot of volume. That's high volume, and that can be interpreted, yes, as a climax, but also, yes, as demand, because it's not on top of a trend. If it's on top of a trend, higher high, higher high, higher high, higher high, and then a blow off with a lot of volume, then I have to detect and see what is it. Is it a climax, or is it a higher time frame breakout? So it's not easy to tell. And even then, after a climax, you have to see if there's a reversal and a break to help confirm the climax, meaning like a sign of weakness, and in the middle, secondary test or shortening of the thrust or whatever. So this, all it did was lead to a test of, what is this right here? Test right here. So this breakout, heavy volume, good prints. The prints aren't that bad, relatively speaking, they're much better to the background action because the early morning can't really figure out what is it. It's all ones and zeros. Finally, they're twos, and so now you have like sixes, fives, 5,000. So this is good volume. Now pull back to test again and again. Here the thrust shortens a bit because it's a spring of this low, of this level. From that spring, you basically have a minor little test and then finally a breakout rally. So your spring comes back down on 18,000 but unable to break. See that 18,000? That 18,000 is bigger than all of these bricks. So it's being bought. The 18,000 here is being bought. It's the attempt to go down, but it can't. So what does that mean? If it means it's effort to go down, and instead it goes the other way with a breakout. So that's like talking. It's saying that market intends to go higher because it can't go any lower. It tried on 18,000 contracts, couldn't do nothing other than move one brick down. And instead you had this rally, 32 ticks, and finally test, retest, higher, 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 higher. Here, I knew something was wrong. So I'm going to explain this behavior, what it is. It's actually a Wyckoff behavior that he talked about in his course, in his works. Actually, he starts off his course talking about this in section 7M. And what it is it's a volume. So, I mean, we talk about it called volume off the top. This is volume off the top. Many times, as part of a change of behavior, you'll see the volume off the bottom or volume off the top. Because smart money knows where to buy and sell. They just know. So they buy low, sell high, they get the highest high where you have heavy volume, or they get the lowest low and buy, you get the heaviest volume. So they're the ones that are selling. And this is evidence. This brick has 27 volume, which is bigger volume than any brick in the entire uptrend. Any brick in the entire uptrend, this has the biggest volume. So I bet this is over more volume than more than 100 bricks. So what's that mean? That means this is volume off the top. So this behavior is volume off the top. Typically, you'll find it attached to a sign of weakness or a sign of strength. That's what happens. So, and it's part of a wave that goes down on big volume, bigger volume than the last 49 plus waves. So this is selling off the top, sell high. This is selling high. So after that, it retests and there's more selling. Now here is the important part. Not just the important part, but here's a price. Price tried to go up and failed. This is evidenced by the wicks. So the wicks here is saying, as David Weiss said in his work, he said these are lost opportunities. So these are lost opportunities, and what does that mean? It means they attempted to go up and failed. Attempted to go up and failed. Price failed. It tried to go up and failed and closed below. It tried to go up and failed and closed below. So this is failure on the part of demand to take the market higher after the volume, the selling off the top, the volume off the top. And in fact, it broke these lows on increasing volume, most amount of volume in the wave. That's a breakdown. That's like a breakdown at very high level at the top actually. So there are 10,000 contracts break, and then a pullback, and then another attempt to pull back, which is also effort. Why is it effort? because 12,000 contracts could not budge. Right there is 12,000 contracts. Tried to reverse on 12,000 contracts. What happened? Immediate reversal down on only 3,000 contracts. What's that telling you? It's easier to go down than it is to go up. Why? The selling is just, the 12,000 is just being absorbed by the sellers. And it's against this breakdown on the 10. So 10,000. So now it goes lower. Okay. So the other thing to note is, yeah, it goes down on heavy volume, etc., etc. But the thing to note here is this must be coordinated with a higher brick size or higher time frame, because you have to know that, is this part of trend or counter trend? This is counter trend. So in a counter trend, what you have is like the end of a cycle where it's a small pullback, or it's not the rally, it's the pullback. The counter trend is the pullback, which is smaller and less than the distance of the rally. The rallies are always bigger than the pullbacks in any trend. So on a higher brick size, you notice that this turn here is what? This turn here is part of a pullback on a higher brick size, because as you know, markets are up. So then it goes down and it tests the level of the higher brick size or time frame exactly. I mean, it's like picture perfect right there against this breakout. So I mean, I was ready here, but the demand wave didn't come off of here. It came later, and it didn't offer a pullback to test, so it screwed up everything. So, you know, I was waiting for this to be to be the big wave, but instead it did a test, a retest, and then came the biggest wave in the last 9 waves. So, you know, that's fine. It can come after 1, 2, 3, I don't care, test, but the damn thing didn't pull back. It didn't even test the breakout. It just had 1 brick. So you have 1, 2, 3, 4, 5 bricks of risk. And I thought it was going to come back, but it didn't. And that's the screwed up part. Anyway, then the market went up. All right. And it hit its objective, wherever the hell it went. All right. So what was important here? What's important here is knowing the higher time frame or higher brick size, understanding that this is part of a pullback on a higher time frame or higher brick size, then observing the level, and then being ready for the move up. And it occurred right here. There was some initial buying also as it was approaching the level. Like you could tell right here, the 9, this is bigger than, you know, all these bricks here, so they're just buying the lows here. But it's not rallying vigorously enough to get in on pullbacks, you see, because it hasn't tested. So that's important to note. And what you had instead was, from the buying level, was a spring, a test of the spring, a minor retest of the spring. Here is the springboard. How do I know it's a springboard? I mean, look at the volume. This is 1,000. Every other volume is bigger. 5, 21. It's only 1 brick and 1,000. So this is the smallest volume, smallest. It's one brick with the smallest volume. I don't know how many, but I think on the whole day, that's the smallest. Here, you're 100% sure there is no supply. There is no supply. Finished. All right, and that's why market was on the springboard right there. It did a spring. Volume came in. It went from 21,000 to 5,000 to only 1,000, and liftoff to 20,000 on a breakout, on a very clear breakout. Problem, didn't come back to test. And big price movement. This is the biggest price movement since the top. That's the biggest price movement. 1, 2, 3, 4. Since the top. So this is continuation off of a level. That continuation has volume. It has a breakout. It has taken out 1, 2, 3, 4, 5 highs. It has a background that is supportive in that there was an attempt to go down that failed, meaning a spring, with a retest, with a test and a retest, attempts to go down that failed on low volume, indicating lack of supply followed by demand. Another thing to know, supply always and demand, like if you observe the rallies, and I'll show you here. This rally comes from a lack of supply. If you just compare the volume, this is 20,000 to 1,000. Now watch. Here, 29,000 to only 12,000. Every rally, you could use any chart you want. Look at the rally and look at the last pullback, like around the last pullback before the rally. Here, 47,000. Look at the pullback before it, 7,000. Here, 40,000. Look at the pullback before it, 11,000. Here, 24,000. Look at the pullback before it, 18,000. I don't know what the hell. When that changes, there's a problem. So if you see, let me show again. I mean, I don't know. This rally, this pullback, this rally, this pullback 2,000, rally 22,000. What happens? Test goes higher. When does that change? It changes right here, where you have 3 and 15, and then after the 15, you have 28. Uh-oh, problem. Why? Because now the down volume in price and distance is bigger than the up volume and price and distance. Distance and volume. So that set up the, move down. And when that reverses, when right here, when is that reverse? The reverse right here, 18 down, 24 up. Right? This is unreadable. The hell, I can't read this. This is too early in the morning, 6 o'clock or whatever. But the point that I'm trying to make is all you got to do is on any chart, take a look at the rally on any chart, bar chart, whatever. Take a look at the rally and take a look at the pullback right before it. The pullback right before the rally always, there's certain cases when it doesn't, but as a principle, always has less volume and significantly less volume, like typically less than half. And it could be even much less than that, like a quarter. So why? Because the lack of supply is what causes demand to come in. It emboldens demand, and vice versa. The lack of demand emboldens the supply to come in, meaning buyers like to step in when selling is completed. There's a lack of selling, and vice versa. Sellers like to come in when there's no fucking buying, right? So Um, when that situation changes, then you know, the usually trend change. So I mean, you just have to understand this simple fact, you know. All right, take care. Bye.